lost. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Are we doing this? Yes, we're doing this. Good morning, everybody. Welcome to the morning show here on Stock Market TV. I am Spencer Israel, joined today by one Steve Strazza. JC is in Chicago, or at least if he's not there yet, he's on his way to Chicago at the moment, giving a presentation today for the CMT Association at the Board of Trade. If you're in Chicago, swing on by. But the show must go on here. We got a lot to discuss today. We're gonna play a little bit of devil's advocate. Maybe we've been ragging on utilities pretty hard. I mean, they kind of deserved it, right? But play devil's advocate. Maybe some reasons to own utility stocks amongst the carnage here. But that's not all we have going on. We have a big M&A deal. More Ozempic news every day. Ozempic. I know Steve's going to love that conversation. Very excited to talk about that. Brian Lund is our guest. He'll be on in about 20 or so minutes. We'll have Kimmy Sokoloff, as always, and Mary. Wednesdays with Mary. Mary Thwaite's on at around 9:40 or so. So that's the rundown. Good morning, Mary. I see you in the chat. How you doing? Good morning to everyone else in chat. Go ahead, drop us a like. Thank you very much. Let's roll.
Hey, buddy.
What's up?
How you doing?
Pretty good. Ooh, Colonel Xanders in the chat. Morning, Colonel Xanders. What's going on today? We got some stuff to talk about. We got a dock full of things.
Oh yeah. JC is in Chicago.
Before I forget, let me drop the link in the chat. If you are there and you want to register or attend, whatever, there's the link. Check it out. Have fun. Okay, done.
So I thought for State of the Markets, I would just take his deck that he's using to present today, pick my favorite charts, and make that State of the Markets, right? Because if you're not seeing JC's presentation today, this is probably the next best thing.
Yeah, all right. I mean, sounds good to me. All right, let's do it. Let's do that. Do we have those slides ready? Those charts ready?
I'm gonna drop the. Oh, Fonz is already in it. I don't know how he got his hands on it. All right, yeah, Fonz has it.
Fonz, how are you everywhere at this? How is he everywhere at the same time?
He's the chart ninja.
I don't understand.
He knows about charts that I don't even know about.
He just appears with charts just out of the blue. All right, let's do State of the Markets.
All right, let's start right here with seasonality. So, throw up chart 2. Here's where we are. We've been talking about the S&P 500. Is it a top? Is it not a top? Does the correction continue or worsen? Or does it end? This was a tradable low, and here we go. One thing that I think we need to be very mindful of is the seasonality trend, right? So this gives us some nice context for where we are. And to be honest, we had Jeff Hirsch on here just a few weeks ago saying it was frightening to him just how good seasonality has been for giving us information where the current trend might be headed over the past year or two. Been pretty much spot on. So what happened? We ran up to the current pivot highs from this summer, started correcting. That began in July. And if you look here circled in red, we're showing the composite. This is the every pre-election year going back to 1950. This is the historical return. Kind of just go straight sideways, consolidate a little bit, and then ramp up into year end. The ultimate low, based on the seasonal trend, is in October. We're just about there now, right? Everybody's very well aware. If you go to the next chart, buy in October and get yourself sober situation, right? We're there now. This is when you zoom out. So we don't just ramp up into year end, but then the election year typically another very good year. So that's what's coming if we keep following these seasonal trends, right? And then hop to 5 here, Alfonso, the bar chart. We got through September, right? And that's worth pointing out again and reiterating. September's a rough one. Sometimes the beginning of October can be pretty rough too. But then brighter skies. Brighter skies ahead. November, December, January, typically very good months. So we're entering a period right now where seasonality is again a tailwind. The tough seasonal period is behind us. So that added with sentiment, if you hop to chart 14, 15 here, Alfonso, sentiment came off in a big way. Stocks have been going down for 3 months now, right? So we went from a reading where sentiment was getting, we're getting pretty bullish again here, to totally resetting, right? So I would have told you back this summer, sentiment is starting to become a headwind again, maybe, right? No, sentiment is a tailwind now. Seasonality is a tailwind. These tops look like they're failing and reversing higher, but there's still a lot of work to do. Let's show all these overhead supply charts, Alfonso. Start at 10. Yeah, you got something, Spence?
Well, I was going to add, with regards to the sometimes weakness in the first third or so of October, right?
Yeah.
I guess that's not an always thing; it's a sometimes thing. And Jeff had said that he was a little bit cautious with just how closely this year had tracked historical seasonal patterns, and that has not tracked because we've had a pretty good October so far, right? So
Yeah, totally. Right. So
yeah.
Listen, it's never going to be perfect. I mean,
Right. No, I'm saying it's a good thing that we've diverged, right?
I think Jeff even used the word scary. Say just how good
yeah, maybe. Yeah.
it's good. But here's where we are, right? If these are little short-term tradable lows, we have our work cut out for us. Next stop for a lot of these indexes is just a major resistance level at the old highs, right? So something like industrials running back into those 2021 highs, and then they'll have the pivot highs from this summer. If you flip down here to home builders, same story, right? So these groups got to go. They've already put in one test. You really want to see these overhead supply zones get taken out here. The same with semiconductors. This is a really big one. Software has been really hot. Semis need to pick up the pace a little bit here. I think really they've already absorbed a good amount of the overhead supply there. If we go back for a second test, I think they do break through. I think some of these shakeout, failed top type patterns that we got gives them enough juice to get it done here. But again, let's see and take it from there. One last one I want to talk about is 19, Alfonso. And then what do you do? What do you buy? Right? If this is the next leg higher, we're using these relative trends to kind of guide us and give us an idea of what future leadership is going to look like. One trend that I think is overwhelmingly clear that you really can't find anybody to disagree with out there these days is large over small, right? We do need to see the Russell 2000 hold support on an absolute basis, but when it comes to the relationship between big stocks and little stocks, large caps all day, mega caps even better. See this giant base in the Russell 1000 versus Russell 2000 ratio. This is very much telling us stick with the large caps. I think if you go up one chart to 18, same thing, Fonz. You know, the NASDAQ 100 is a large to mega cap growth index, right? So you're getting a breakout on a relative basis. And what a beautiful chart, right? Those are the .com bubble highs over on the left-hand side of the chart.
Wow.
Yeah.
Wow. And the reason I like all those sector charts you had earlier is not necessarily because I'm bullish, but because you have an out. You have a tradable out, right? The September lows. That's it, right? You can buy that's your stop for all this stuff, right? So I always like it when there's a very obvious out, and there's a very obvious out in all these setups, which means that's good. I like that.
You call it an obvious out. I'll call it like a well-tested level, right? Or a level of interest or a confluence of smart. But what you're saying is I want to trade against something with price memory, right?
Yeah. Yeah.
Low in the past, like a key high, right? Absolutely. We all do. Sometimes I say I want a clean chart. Why do I want a clean chart? So I know exactly where I'm in and where I'm out. There's no, there's no arguments about it in my mind. You also have a clean out here to the upside, right? If you're entering these trades, do we have any of these short-term tops, Fonz? I don't know where in the deck the short-term tops would be. I think they're in here somewhere. If you can find one, throw it up. Basically, if you're entering, these kinds of tactical trades that we've been talking about since last week, betting on these failed tops, right? Buying this little whipsaw move higher, your out is either the pivot highs, right? Or in the case of the charts that I just showed, industrials, home builders, semiconductors, tech, it's the old highs, right? So you have really clear price objectives here too for a lot of these trades at the index level we're talking about. But most stocks look that way too, right? We talk about Google, we talk about Meta. If you're getting along those stocks, we've been talking about them nonstop for the last week or two now. It's the old highs, right? It's the old all-time highs for those stocks, right there.
I went and bought some Meta yesterday during the spaces.
I don't even want to jump the gun on it. Everybody wants to talk about Meta these days, and I love it. Mary sent me like the best list ever of stocks she wants to talk about today. I'm like, well, I love Mary. So I'm like, we could really go in any direction, but I think we're gonna talk about Meta when Mary comes up.
Okay, that's cool. I'm cool with that.
Rachel, software stocks are the best stocks in the world. I'm very comfortable with saying that. These are the best stocks. You have to own them. Steve Eisman was on. Actually took some notes. You want to talk about it?
Steve Eisman?
Oh, Big Short fame.
No, yeah, I'm familiar. I don't. Where was he on? I didn't see it.
He hops on with the guys after the bell. What do they call it? Fast Money on CNBC.
I haven't watched that. I haven't watched the show in a while.
JC used to do it.
Yeah, no.
So Steve Eisman of Big Short fame, I think he's at Neuberger Berman now. He comes on, he like sits at the round table and hangs out with them, talk stocks. He had some really cool takeaways. So I don't know what's the one that I was just thinking of though. What were we talking about?
Software. Software is eating the world.
Yeah. So he talked about the Magnificent Seven.
Of course.
He asked, like, do you own these stocks? He's like, of course I own these stocks. And then good follow-up question was, do you own them because you have to? Because you're competing with a benchmark? And he was like, no. He's like, all that aside, maybe it is true, but like I own them because I want to. He said that's where the dynamism is, right? And what it means is like that's where the innovation is coming from. So in this case, maybe not just software, but your Google, Amazon. There's a lot of software in both of those too, right?
There's also no shame. There's no shame in saying I own them. Yes, I own them because I have to. There's no shame in that.
That's where the innovation is. It's because they have the money of the biggest companies. So if you really want to be invested in like the next mega trend, you have to be in these names. In NVIDIA more than any. But the thing that really caught my attention when I turned the volume up when he was on, came right on and said, banks are uninvestable. And again, this is Michael Eisman of Big Short fame, famous for betting against financials. Okay. But he said there's a problem with the net interest margin. Maybe that's their business, right?
That's what Bloomberg reported yesterday, that Bank of America is sitting on huge paper losses, right? From their long-term treasury position. I mean, I don't know how you get around that. I mean, it's I don't know. Yeah,
we don't see the problem ending for a while too, where rates are. So we'll see.
Right, because even if they come down like a little bit, they're not going to zero. You're right. So, maybe they come down 4%. I don't know, but like still high, right? I don't know how you get around this problem. It's a big problem for the banks. So
then you got the classic. If you have to buy one, buy JP Morgan, which is something you hear a lot from smart people. I agree. And then he made a good point just about like the way that they're regulating everything that's been happening, right? They're upping the capital requirements, but really there's no reason to do that for the money centers, right? Like you don't need to do that to JP Morgan. That just hurts their ability to make money in the future. They have upped capital requirements. That's less cash that they could use to profit from.
That's true. Well,
and he was like, just you need to kind of like capitalize or work with the regional banks. But now what you're doing, if you're doing it across the board, then the big guys get hurt, unfairly. So that was interesting. He made some funny comments about anyone trying to predict a recession should practice some humility. Everyone's been wrong. He basically made the point, what's wrong with waiting for a data point that would support or indicate a recession is coming before calling for a recession? Right? He was just pointing out like economic data is great And the reason why we keep having all these recession calls is because people are expecting a recession. We've never seen any evidence that one is actually coming. Economy keeps humming along.
Jamil is asking if Amazon's tech stock. Well, JC is not here, so of course it is. Obviously, moving on.
That's worth clarifying, right? Because when I talk to you guys, I don't think twice about it. I'm talking about tech stocks a lot. I'm always talking about tech stocks a lot. When I say tech stocks, I don't mean what the powers that be in S&P Global tell us is a tech stock. I mean, like you in your everyday life, if you think something's a tech stock, it's a tech stock. So yes, Amazon's definitely a tech stock.
Right.
Google, tech stock. Facebook, it's a website, guys. It's a tech stock, right? I'm not talking about, it's just Apple and Microsoft because they're categorized as tech stocks. No, I'm talking about all tech stocks.
Yeah, we're not talking about the tech sector. We're talking about companies that common sense says are tech stocks, right?
Right.
Yeah, common sense.
Most of the good ones. When's Lund coming on?
Well, he's here. I don't know. Brian, you ready? He can come on.
Headline? You want to do a headline or two?
No, because they're gonna lead to long conversations. A few of them are. So maybe we see here. I'll do like some of the quicker ones.
I won't talk. Why don't you just do them?
I don't want to burn through them all so fast because I want to save some stuff for later, a little bit later, because some of these are gonna be some really good conversations. I'll just say we talked. What was it last week? I think when the journal reported that ExxonMobil was sniffing around Pioneer. As I said at the time, they are pretty good with this stuff, right? So usually when Dow Jones reports an M&A deal, it usually happens, right? So that's being confirmed here this morning now. ExxonMobil is buying Pioneer for about $60 billion. There's really no trade to be had in that. The trade to be had here is watch other Permian stocks. So ticker PR, right? Permian Resources, Diamondback Energy, Coterra Energy, CTRA, Devon Energy. Keep an eye on those names because this happens all the time. Whenever there's one, especially a deal of this size, people will look or poke around the rest of the space and maybe try to assume that there will be another deal or the market will anticipate another deal in that space. So watch the other Permian Basin stocks today. There's no trade to be had in Pioneer, obviously. ExxonMobil consensus seems to be it's a good deal for them, but the stock will open lower because that's what happens on big M&A deals. But just watch the other ones. Watch Diamondback, watch Permian Resources, watch Devon, names like that today, because don't be surprised if they all trade higher on this news. In sympathy.
So Pioneer is the largest producer in the Permian Basin.
It is, yes. This
is not even...
Well, not anymore. Now it's Exxon.
And Exxon was fifth, believe it or not.
Yeah.
This is not even their biggest acquisition ever.
What?
And guess when it was? It was 25 years ago.
What was it? Exxon and Mobil?
Imagine that in 1998, a $75 billion acquisition.
Yeah. All right. Yeah. I remember going to Mobil gas stations when it was just Mobil.
They still have them.
Do they? I haven't seen one in a while.
Oh.
I don't know.
I think so.
And you're right, GDS. We've talked about this on What the Fick a lot in the last.
What's he been calling for? Consolidate.
Yeah. But it's one thing to say that. It's another thing to see it happen. So we're actually seeing it happen here this morning. So anyway, okay, let's bring on Brian Lund here. See what's on his mind today. Brian, you good? Yeah, he's good.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Brian Lund, editor of the Lund Loop.
Hey, Brian.
Spencer, Steve, how are we doing this morning?
Good, man. What's going on?
I feel there's a presence missing here. I don't know. It feels different. What's going on?
Weird. I don't like it either.
It's more peaceful.
Right? Totally, 100%. I feel like I'm not going to get yelled at this morning. That's great.
It's too quiet though.
I woke up on Saturday and I went into my Discord and people were already typing and someone said, "Oh, look, JC triggering FinTwit on a Saturday morning," and they were like posting tweets that he put out there. They were upsetting people.
That's what he does.
He's gotten good at it over the years, hasn't he?
Oh yeah.
He'll like
He's
do
an
that, and then he'll go like live his life, you know, and he'll
Yeah.
like just leave the computer and then just like light a match and walk away, you know.
No, like he'll literally look at no replies too.
Yeah.
Yeah, smart.
Yeah.
Smart. By the way, can I start off this morning by bitching about something? So I was in Boston last week for a few days, which, by the way, Boston is a goddamn beautiful city. I love that city. It reminds me of what San Francisco was like before it turned into a homeless encampment. But great city. And you guys on the East Coast have it so easy when it comes to trading. Like, I can't believe how leisurely my day is in the morning. You get up, you get coffee, you know, it's like the market doesn't even open for 2.5 more hours. It's
you could,
so
do something before the market.
It's funny because, you know, having kids, like one of the major stumbling blocks for my whole trading career is like, you know, I want to be a present dad. So I'm taking them to school. I'm getting them up. I'm making them breakfast. That's all prime opening time for the market. And I can only imagine what it's like on the East Coast. You know, your kids they're at school, everything's taken care of, you're relaxed. 9:30? Really? 9:30? What year is this again?
I don't know how you guys do it either over there.
It's tough.
I've never got it. I've never understood it because, you know, if you want to get the equivalent, you're up at 4 a.m. right?
The market's closed by 1. What do you do?
Yeah, we'll say that again, Steve.
Does work end then? Like you just go?
Yeah. Well, 1 o'clock. You know, yeah. Don't complain. You have the whole afternoon.
Yeah. Well, the problem is that if you interact with people that are on East Coast time, they're still doing stuff, right, for the end part of the day. But yeah, no, I get it. I went to Traders Expo a few years back, and there was a guy who traded in Hawaii, and the market closed at 10. So he was done with this whole day, but he had to be up at 1 in the morning, some ungodly time.
Ian used to live there. We should ask him about it.
Oh,
we should.
Okay.
Yeah.
Ian, big Hawaii guy. All right, Brian, what's on your mind? You're interested in this Birkenstock IPO or something?
Don't know anything about it.
No.
Could care less. Yeah. I'm on a Twitter fast right now. In case you didn't know, I've been off Twitter for the last week and a half or so. So
actually, I was going to ask you, I did Spaces the other day. God, if I ever needed just another sane person on a panel with me, I was like, where's Lund? Monday.
Hence the reason I'm off of Twitter.
You know, I've been thinking about that too, only because like the events of the weekend are like very depressing, and Twitter was extremely unhelpful, as far less helpful than it used to be in when there's big global events. So how's that Twitter fast going for you? It's going great.
So I here's what I did. So I took all my social media apps off my phone when I was at the airport at LAX last Monday. So I'm like, you know, I'm going to go on this trip. I'm going to take off my apps, not really check in. I went to dinner with some people the next night, and they're talking about Kevin McCarthy. I said, what? Is that Kevin? What? I had no idea, right? And then 3 days later, we obviously had the Middle East blow up, and I had no idea what was going on. And the funny thing is, I don't know, it's funny, but it's odd. Oh, do we lose Steve?
No, he's here. He's just sneezing.
The funny thing is that last time I went on Twitter fast, it was literally during January 6th, and I had no idea what was going on, right? So, you know, look, it's I'm still consuming news, but I'm doing it from like very specific places like Wall Street Journal or the New York Times. It's just the swamp and the sewer that is Twitter is just so toxic. And I find that I spend way too much time on the comments. I get in a shitty mood. Can I say shitty on this? Sorry.
Yeah.
I don't know if
yeah.
And of course, at the end of the day, the big thing is, how is this subliminally coming into my opinion of the market? And now I've been doing this for a long time, so I'm pretty good at keeping those things separate. But I know a bunch of people that we're talking about, you know, after the I don't know what we're calling it, an invasion, whatever we're talking about in the Middle East. Yeah. They were saying that's it, the market's going to tank, right? You know, run for the hills. And of course,
every time they say that,
so. It's been surprisingly pleasant not being in the Twitter rat race.
Okay, so the last time you did this, January 6th, and then this time Hamas attacks
Yep.
Israel. So tell us the next time
Yeah, I know,
we're
right?
going on a Twitter fast, and then we'll just like
Yeah.
brace for some kind of big global macro-y thing that will cause all sorts of panic and stuff.
Well,
Yeah.
it gets extra dumpy around these events. I mean, people are just nasty and crazy.
Yeah. Yeah, and I believe honestly that we are in what I call a post-truth, pro-attention world, where people don't really give a crap about the truth. They just want attention, and it's so funny because on whatever Monday night, Tuesday night it was, McCarthy losing the speakership was the biggest issue in the world, and then all of a sudden 3 days later, blown off the headlines, right? It's like, so it just goes to show you how these cycles happen, and people just they want to use them to emote and push their agenda and get attention, and it's just I'm just too old for that crap.
So
I hear you,
Brian. Give us some words of wisdom. You've been participating in the market trading for a long time. What do you do around these events? Do you completely ignore them? Are you aware of them? Do you trade them? What do you do when wars break out?
Yeah, so I think it's really important to separate your personal opinions and the emotions that come with that, and your trading and your investing. I mean, we're all human beings. We're not automatons. We see the video of what happened recently. We're outraged, we're shocked, and those are conversations that you can have with people, but you have to understand that they have no bearing on what happens in the market. And if the real goal of your trading and investing is to make money, it's like I always say this analogy about people that have these rules about how they're going to participate in the market that have nothing to do with the rules of the market. It's like if you were to say, I'm going to play football, but we're not going to play defense, right? That's somebody that says, well, I won't short. Now, maybe you don't short because you're not good at it, but to be like, opposed to shorting. And so it's the same thing in the market. If you're in the market for some other reason than to just purely make money, you're just doing it wrong. And eventually it's not going to work out for you. So I just try to, I get upset, I yell, I talk to, but then I go, okay, what is the market doing price wise? And the irony is that the market actually went up after Hamas invaded. And so again, it's just another reason not to let your emotions take over when it comes to investing or trading.
Yeah, it's funny, right? Because when I come on and have to say something like that, it's almost like you feel insensitive to be like, the market's going up, everything's fine, right? But it's like, but you're right. You need to totally separate it. It's not about that. I'm just thinking about my money. The market's okay. Don't overthink this. This is just noise. But when you say stuff like that in a situation like this, I think you do run the risk of sounding a little bit insensitive. So there's
this push in society for the last few years that if you don't have a goddamn opinion on everything, that you're a heartless bastard or you don't care, right? And here's the funny thing, right? I got a laundry list of people that want me to care about their cause. And you know what my first cause is? Getting out of bed in the morning, right? And my next cause is getting my kids up and then worrying about how I'm going to pay for their college. And I got a lot of shit that I have to worry about for myself, and everybody does, right? I mean, all issues are local, meaning us, right? And then once I deal with my shit, right? Okay, if I've got some extra energy or attention left over, I'll try to, get involved or pay attention to your stuff. But it's so arrogant on all these groups that think that we're just going to be all day long paying attention to everybody else.
Right.
Yeah, that's true. The way I think about it is you just separate it in your brain. So that, if whether it's what's happening in Israel now or any other event, the part of you that cares about that is the emotion part, the part that has sympathy or whatever, the part of you the part of your brain that thinks about your money and that's a separate thing, and that is not thinking about this at all, right? That's a separate part of your brain, and that part of your brain ignores what's happening, and the part of your brain that cares about these things and feels that's the part of your brain you allocate. You're allocating parts of your brain, right? And that's the part of your brain you allocate towards following this, right?
And it's not that you're not experiencing the emotions, but so many of the things that people want you to do are just purely performative, right? So here's the issue. But you didn't tweet about it. We didn't say anything about it. Well, what is that doing? Is that giving you this sense that you just did something great? Like, if you really care about that, get off your ass, go down to a shelter and support something. So support somebody. Give your money. Don't tweet and tell me how you're the greatest person in the world, and don't expect me to do that. Sorry, I know we got a weird rant this morning.
I don't know. But
let's talk about PE ratios. Damn it, come on. Let's.
Well, the Birkenstock PE. I'm just kidding. We're not going to do that. Birkenstock IPOs today.
To wrap that up, beware of people who are becoming geopolitical experts all of a sudden, right? If you watch, I watch the financial TV, I'm on Twitter Spaces, and people who I'm used to coming on and sounding great and being experts at markets and trading and investing, now all of a sudden are war experts, and they're not, right? They might be disguising themselves as that for a week or two, but that's some dangerous advice. And anybody who's coming in saying, buy oil, buy aerospace and defense stocks, be wary of that too, because we see this every time.
Yeah, war experts this week were political pundits last week.
Yeah.
Back last year, they were balloon experts, right? When balloons were coming in here, right? They're crypto experts. They're SPAC experts. Again, this is a post-truth, pro-attention world, and they will latch on to whatever. It's like, it reminds me of like in the early days of Twitter, there was this hack that you could use to get more followers. And what you would do is you would put a hashtag of something that was trending somehow like shoehorned into your tweet. Like it made no sense, but you just wanted to pull people in. You're talking about chocolate and somehow you're putting in a hashtag for Hamas. Hamas doesn't like chocolate, so you get attention. That's what these people are doing. They're literally just grabbing ideas and issues and contorting them into what they're saying so that people will talk to them. And they do it in the market all the time. It's the hot stock, the hot sector, whatever. They're taking that, they're bringing it in, they're putting an opinion on it where they may not have one or care about it, but they just want you to pay attention to them that day. And then the next day they'll be on to something else.
It's a lot of fun. It's very freeing to say, I don't have an opinion on that. I'm good. I'm good.
Or how about I haven't formed an opinion yet? Or how about like, this is a complex issue and I need time to figure it out. I can't just, one of the smartest things, someone is a very smart person when they say, I don't know, I got to think about that. It means they're really thoughtful,
So Brian, I'm on Twitter Spaces. These things run like up to 2 hours. I probably got in a little bit late. I'm usually pretty active. If I'm on a space, I'm probably talking. Hour and a half, I didn't say a word. And I was gonna come on and chime in and say, guys, what a disservice you're all doing for the 800 people listening here. What a shame this is. I said, I'm going to bite my tongue, shut up, just DM the host and kind of let him know what I thought. But I didn't say a word for an hour and a half because I was like, I have nothing. I'm not an expert on this. Apparently everybody else is. Fascinating.
Look, at the end of the day, the truth is like kale, right? Kale's great for you, but nobody likes it. Right?
That's true. All right. Anything on your mind as far as markets go, Brian, right now? Are you tradable bottom or what?
Yeah. So I really think that this last pullback that we had and that rocketing off of it last Friday, I feel like that's the pullback is over. Right. And for sure, I know this. If we close back below those lows, then we're in trouble. Right. If we can't hold that pullback. But that was just a picture perfect. In my Friday or my weekend newsletter, I actually looked at the intraday action on a 5-minute, and it was eerily similar to that big green bar that we had way back in October. Right?
13th.
Yeah, that's right. So I think that, but I'm a big proponent of the move after the move. So we've seen the market rocket off since Friday. We pulled back a little bit yesterday. I want to see a little bit of a consolidation. Then the next move up, I think that's when we can really go risk on. So that's where I'm at right now.
I love you, Brian. I mean, I couldn't agree more. Those candlesticks from Friday, I mean, like it happens to me once a year, maybe once every couple of years where I'm like, wow, this action today, like, right. Wow. If you look at some of the best or strongest funds in the growth space, so the cyber funds, they engulf 2 to 3 weeks of real candle bodies in one day. And then, like you said, that's not it, right? One great day when you're in a messy market like this, you got to be suspect of. But the follow through that we got on Monday, coming in to a red tape with war headlines, everything lower, these things rallied all day. Some of them weren't able to totally turn green, like some of the semiconductor funds and other stuff in tech. But then you got the follow through yesterday. So I think to me, that's confirmation of those bullish engulfings from Friday. And if you look at some of these things, they're just at key levels. whether it's the NASDAQ or the S&P 500, they're kind of like undoing these just textbook tops. And we know that when they're not tops, they're just continuation patterns. So I'm with you. I think we're like higher.
Yeah, and you're right. It's not just the candle itself, because candles without context don't mean anything. It's where that candle happened, right? It happened at the exact spot that you would think it would happen. And I mean, and you can even look at it. It went right off the VWAP from the first of the year. I mean, it just made so much sense the way it unfolded. And that's, you're always taking little pieces of evidence and putting them together to try to get a theory or maybe a prediction. And that one just had such a confluence of different pieces there that it's very heartening.
Yep. So how do we play it? What are the vehicles? What are the groups? What are the stocks you're watching?
Yeah. So, I've been talking a lot earlier this year about the stage 2 stocks, right? And I was talking about how I felt like we were in stage 2 with a lot of names. And one of the metrics I was using to determine that is that they would pull back to the 50, hold with a 50 above the 200 and hold. And what's interesting is I've seen in the last couple weeks a lot of those stocks fail initially. And I was a little concerned. I'm like, okay, what's going on here? And I think what's happened is that move off the lows in October was so strong, right? And it's so sustained that I think we probably overcorrected a little bit. But a lot of these stocks are firming up. And so what I'm looking at for the back half of the year and then going into the next part of or into 2024, what stocks have shown the best relative strength, right? Like, I'm not a Fibonacci fan. I know JC's not here, but I don't believe in Fibonacci's. But I use them for a measurement tool, because when a stock pulls back, I look at certain levels, like a 25% pullback, okay, 33% pullback, you start getting over that to 50, then I start wondering whether the run's going to last. And I have a lot of stocks that are really close to their highs from that October run. I mean, look at a stock like Meta. Meta is just a beast, right? Look at Akamai. I can never say that one correctly. AKAM, right?
Akamai, I don't know.
Akamai. There's others that are setting up really nice. DraftKings is setting up nice. FedEx.
DraftKings. Look at that. I haven't looked at that one for a hot second.
Uber. I mean, look at Palo Alto Networks, right?
I know. Well,
a bunch of these stocks that are just right at those same highs that they came off of in October. That shows me they've got good relative strength. So I'm going to be looking for bases and setups in those stocks going forward as the potential next winners.
Palo Alto looks good. I'm going to do some buying. I bought some Meta yesterday. I'm going to be doing some buying. Some of the names you just mentioned, some of the names you just mentioned are on my list. Palo Alto was on my list already. Cyber was on my. I'm just going to go down to the cybersecurity ETF. Basically,
we're working on a deep dive on the cybersecurity industry right now. It should be
And CrowdStrike looks interesting. Like, if you look at CrowdStrike, so it's very. I guess I can't share my screen, but
we got.
I mean, you can if you want to.
How do I do it?
There's that little button. Oh, but we have a chart right there. So
we have a chart ninja, Brian. We have a chart ninja right there.
So if you were to draw a downtrend from that high on the upper left-hand side, right? So it's obviously broken the downtrend. It did some nice basing sideways there, and now it's starting to.
And that's your stage 1 that you talk about.
Yeah, that's exactly right. And so this, to me, is a picture perfect chart for something that you think has gone from the decline distribution stage, went into accumulation, and is now going into, I guess, the markup stage. I always forget which ones they are.
Markup, I think, is what Wyckoff uses. I don't know what Weinstein called it.
Yeah, I mean, there's 4 stages. I know the last 3 and 4 decline distribution. Then I guess 1 is accumulation. I think 2 is, I don't know, I can't remember, but it's stage 2.
Right. Yeah, so that means new uptrend, new leg higher, right? That's where you want to be involved. So if you're getting it right as it transitions from 1 to 2, basically, we've been looking for the same thing. The way we say is a reversal pattern was just completed. Now a new uptrend is underway. You're saying we're moving from stage 1 to stage 2. Basically, what we're both saying is this is when you want to buy these stocks.
Yeah. Those are that's the longest up stage, and it can go 6 months, 24 months. And now I'm not saying for sure, right? But the thing is, you can see the areas where if we fail, if we break down, you'll know that you're wrong. Yeah. But this is CrowdStrike is a sweet setup from a stage 2 standpoint.
But do you find that, I know you're mostly bottoms up, but are you finding that you're favoring these growth names or these tech stocks or?
No, I'm oblivious usually to what sector. I mean, look, I like to have a tailwind. So if there's a sector that's doing hot, but like, for example, I'll give you a great example, like oil stocks. Like I don't day trade oil stocks, right? They just, for me, they don't move in a way that is conducive to my day trading, but I will trade them from a longer term standpoint. So like if I see a sector that's moving in what I think is a macro move, I might get involved in them, but I may not day trade them, even though they're going up over time. I'm going to go to the tried and trues, the tech names, your chips. I want stocks that are super liquid, that are covered by a lot of analysts, that move as predictable as possible. Those are the ones that are the best, short-term trading candidates, in my opinion.
I like what you're saying.
I know there's this idea among traders, like I got to be able to trade everything and any sort of sector and short. That's bullshit. Like, you pick your sweet spots, the things that you're good at, and just stick with them. I've cursed a lot today. I'm sorry, guys.
Couldn't agree more.
No, like every stock, it has like its own character, right?
Yeah.
And it's like the character of some stocks might not fit the character of your trading style and your approach, right? And that's totally great point.
Yeah, you can always have surprises, but think about it. Like if you have a stock that trades, a gazillion shares a day, it's covered by every analyst, everybody trades it. Generally, it's going to be much more liquid. There's going to be less surprises compared to like some biotech stock that's super thin, right? Has a big spread, nobody's following it, and then one day news breaks and it drops 25%.
Yeah, it drops a press release at 2 p.m. and then the stock is 20% while you're trying to trade it. That's not fun.
Yeah.
No, it's worse. It's a press release at 6 a.m. and then you haven't even gotten out of bed yet, and it's down. It's down 30%.
Would you group coal and uranium into the oil category for tough to day trade?
100%. Those are things that are if I'm going to buy those and I've been, obviously we've talked about uranium for a long time. Like those are put in a drawer. This is a macro trend that I think is going to play out over years, right?
Yep. I'm with you. All right. I don't have anything else, Spencer. What do you got?
No. I think we're good. The market turns. I like to keep half an eye on the worst performing ETF of the year, the pot stocks, but I don't know.
Are you still building positions slowly into oil and gas, Brian, or are you just saying just wait for this range to break out and then?
I have multiple time frame accounts. I have like trading account. I have long term accounts. Like I let my money manager people do that sort of stuff. So. Like if I see a trend evolving or something I think is big, I'll put maybe some money of my own into my own account. But generally, like I'm still looking for the 3 day to 3 week trades.
Yeah. Well, there's a lot to like, certainly. All right, guys. Better. Brian Lund has a great Substack. The link is in the description on YouTube. Check it out. Brian, have a good one.
Thanks,
yeah,
Brian.
thanks as always, guys. Appreciate it.
All right.
Talk to you soon.
All right. I'm never going to shake this cough, I swear. Okay. It is 9:15, give or take a few seconds. We'll have Kimmy on this in a sec. We're about 15 minutes or so from the open. We'll bring on Mary after that. We have some news to go over. So a lot still to get to. And chat's been nice today. You guys there's been some very insightful comments. Rachel came up with the word I couldn't think of earlier, compartmentalization. Thank you for that. It was somewhere in there, kicking around.
Someone say that our show assaults their senses. Did I read that right?
Well, I didn't see that comment.
Your show starts at 5:30 in the morning here on the West Coast. The content often terrific, but it assaults my senses.
Oh, there we go. Mark.
As a compliment.
Thanks for waking up early with us. We appreciate that, man. I don't know how you got. I spent what was it, April? I spent like a week out in San Diego, and I couldn't function.
I know.
It's really difficult. Anyway, all right. Market's looking good. Let's take a quick look at that, and then we'll bring Kimmy on. Oh yeah, look at the green on the screen. Oil's down, Bitcoin is down, the dollar is down, but major indexes looking okay. S&P futures are up. Gold is up. NASDAQ looking good. Okay. Decent day for the market so far.
More follow through.
Yeah. Let's see what Kimmy's watching today. She had a busy day yesterday. What, like 7 for 7 or 8 for 8? Something like that. Let's find out. 7 for 7 yesterday. Is that right, Kimmy?
I think so. Is that right
Yes,
in there?
7 for 7.
I don't know.
Let's see. Cloudflare, which we talked about, Adobe, Supermicro, Tesla, MicroStrategies, Palo Alto. Man, the cyber slash software is looking good, right?
Yeah. I did a little short in Palo Alto. A little.
Oh, you
quick
did. That's right.
So hey, Rachel. Good morning, everyone. Yeah. So it was a good day. It was a good day. And then 12 o'clock hit, and like probably 12:30 or so, the market took, the spies hit 437, and boom, it slid back down to like 434.50 or 60 or so. Now we're back. PPI was this morning. We have FOMC minutes today.
We do minutes. We have minutes today, and we have CPI tomorrow.
What?
CPI is tomorrow. Minutes today, CPI tomorrow.
Right. And
Right.
I believe someone mentioned in the room that a Fed speaker today. So we'll.
Yeah, but that already happened.
I think there's one later on too. So
Oh, is there? Oh, okay. but you don't pay attention to this stuff. Neither do I.
Well, no, I mean, it could make the market, like, look what happened. Like, the market was at 437. All of a sudden, went whoosh. I think Biden was speaking or was going to speak, and whatever it was, the market pulled in yesterday. I'm hoping, I'd love to see the spies up at 438. There's a gap up there around there. So we'll see if we get there or not. Yeah, I recommended coin in the room yesterday. So it was a choice. People could have taken coin. Thank you. I don't know who 92 Fish Gut is. In the room, you could say hi. I don't know who that is. So we'll see.
Right. What's on your list for this morning?
I'm gonna watch. We traded shop earlier in the week. Today's Wednesday, right? I feel like it's a million days ago. And then now it's at a nice little breakout level. I did recommend it yesterday. It's not going to it didn't push yet. So I'm watching to see if it pushes up to like into the gap at 56.80 or so. So it's something I'm watching. Has a big resistance here around the 55.50 level. So we'll see how it gets going off of that level.
Surprised to see Tesla on your list. I know Tesla bounced off the open yesterday. It's been quiet. We haven't been. Tesla's not been on my radar for the last couple of weeks or so. It's been just pretty range bound.
I trade Tesla pretty often here and there. I kind of missed the morning pop, and then it was like stuck at like 265.50 or so, and then it finally pushed. I said there was potential up to 267, 267.50. I didn't hold it as long. It is what it is. Some people held it longer.
Yeah.
I just went for a quick one in there.
All right, guys, if you want Kimmy's trades as she is making them, like I said earlier, 7 for 7 yesterday. She's calling out her trades live. Also, she calls out ideas, things that she might not take herself, but idea is an idea is an idea is an idea, right? And that's what the room is about. So if you want to get into her room, the link to do that is in the description on YouTube. And we have some people that are in our chat that go there right now, basically. So, Kimmy, go get her. Have a good one, and have a good day.
I will, Jason. Joseph, I will. I'll show my dog.
Oh, so you get live trades and Kimmy's dog. What could be better than that?
I can bring her over. She's lying down. I'll show her tomorrow. I'll show you her tomorrow.
All right. We'll see you tomorrow. I'll hold you to that.
Thank you. Bye.
All right. See you, Kimmy. All right. 9:20. Let's do some news now. I've been waiting to talk about this stuff for almost an hour. So here we go. In no particular order, Birkenstock IPOs today, everybody. The pricing for that is $46 per share. Gives it an $8.6 billion valuation. That's a lot of shoes, man. Or sandals? What do you call those? Shoes or sandals? I'm not quite sure. Anyway, Birkenstock ticker is BIRK, B-I-R-K. That's the new BIRK. We have to figure out a new name for Berkshire Hathaway. Birkenstock is Birk and Berkshire is Berksh. I don't know. Okay, so keep an eye on that. New IPOs are always an excuse to look at prior IPOs to me. So was watching ARM, was looking at Instacart. Instacart not had a great opening so far. Arm's been okay. I think Arm is above its IPO price. Instacart decidedly not. Yeah. Instacart. Oh man, Instacart, that disaster.
I'm interested in Instacart.
Yeah, I mean, it would look like $30. It's at 26 now, 27 this morning. It would look 30 seems important, but I don't know what that IPO price was. Probably somewhere in the 30s. The opening price was 42. So
it's a real company. They make money.
Yeah, advertising.
The business.
Yeah. So anyway, if you care about such things, Birkenstock will open at some point in the morning, and like $8.6 billion valuation. That's just to give some context to that.
We're selling sandals. What's Deckers?
I was going to say, so Deckers Outdoor is $13 billion. Crocs was my first thought. Crocs is $5 billion. And Steve Madden is $2.4 billion. So Birkenstock, those are some expensive shoes, man. $8 billion. Anyway, enough about that. What else did I have on my list here? Disney is raising prices at Disneyland and Disney World. Disneyland getting a 9% increase. Disney World getting a 10% increase in ticket prices. So if you thought Disney World was expensive, well, it's only getting more expensive. So there's that.
Do you wear the Birkenstocks?
No, I've never owned a pair of Birkenstocks before.
So I Googled them yesterday. I've heard about them before, but I don't know. I guess I didn't really know what exactly they were.
They're sandals.
These are like $200 like clogs.
Yeah, more or less. And yes, Nick, it is a 300-year-old company. So it's not as if this is like a new company that's growing like gangbusters, right? Although they did have a good couple of years post-COVID, but
weren't they just public and then they got taken private like 2 years ago and now they're coming public again?
No.
Oh.
They were not public before.
Okay.
All right. Let's talk about the story of the day in my world, which is Ozempic. I bow down to you, our new overlord, Ozempic. Every day they're just taking names.
Seen this before.
So the news here is that there was a trial for to see how Ozempic treated diabetes and kidney failure in people with diabetes, and it turns out it works.
Well, more than that.
Novo Nordisk is actually stopping this trial a year ahead of schedule.
Yeah,
because the data was so good for giving Ozempic again to people with kidney failure as a result of diabetes. So
what do you want? What do you want me to say here? I heard this on bed this morning. It's like 6 o'clock in the morning. This is what I hear on the news as soon as I turn on the TV. I'm like, oh my God. So if I heard this right, I read the press release. This drug is so good. It is so good. We don't need to do the normal trials. Approved.
It's not approved. It is not approved. It is not approved.
Are you kidding me? It's going to be approved. They're fast tracking this thing. This whole thing smells so stinky bad. They're on here calling it a wonder drug and this and that. There are no wonder drugs, so I don't know.
Anyway, if by chance you happen to own any of the publicly traded dialysis companies like DaVita, ticker DVA, or Fresenius, ticker FMS.
Well, this is Novo, Ozempic, right?
Right. But the implication here is that this drug is going to materially negatively impact the number of people on dialysis. So it would stand to reason that's why DaVita is down.
Yeah,
what is it down this morning? It was the biggest loser this morning that I had. It's down 17%. Fresenius, FMS down 16%. Look, tomorrow is going to be another one. I mean, every day with this drug, there's something else.
Listen, I hope I'm wrong, right? I hope it is one. I hope it cures cancer next. I'm just skeptical.
It's coming for your weight loss. It's coming for your snacks. It's coming for your diabetes. What's next? What can't this thing do?
Yeah. So Novo's trading up on this news. Here's the other thing now, right? This has gotten so crazy. Do you know that Novo Nordisk is now by far the largest company in Europe?
It was always among the largest companies.
Nobody's close now.
It was always in the top. It was always in the top. What, 5 or 10? Yeah.
Fine. They added 300 billion in market cap since the COVID lows.
Hey, man.
So, listen,
market's efficient. What can I say?
A lot of good being priced in here. But we'll see.
Also, not just Novo. According to a note from Jeffries, this news makes the case for another drug from Eli Lilly. They have a drug called Monjaro.
Yeah, they're the same drugs. Yep.
Right, exactly. So Novo and Eli Lilly both up this morning.
Hey, Lilly's up 3% here too. Yeah, totally.
Yeah.
Move. Yep.
One more loser is off this is Baxter, BAX. I guess they make products that are used in these dialysis centers. So that's why BAX is down 9%. So yeah, BAX, DaVita, and Fresenius are your 3 losers off this one.
So I finally got one of my buddies on the phone yesterday. He's a biotech analyst. All over. A lot of these big biotech shops too. And I said to him, what is actually happening here? Is this real? And he said, I can't say if it's real or not. It seems real. They keep prescribing it. And what he pointed out, though, was he said, this is not early innings. Like, if this is the trend you're looking to invest in, he said, at first they thought the total addressable market was 25 billion. Then everybody was excited when they upped it to 50. Then it was 100. Now it's like maybe 150, right? So he's like, based on what we initially thought the market was and how it's 5x of that now, how much more could it really run? This is probably it. So great time to ring the register in these names, in my opinion.
I don't know if it's it. I feel reasonably confident that it's going to go higher from here, but has most of the move been priced in? Probably.
Easy money's made.
Right? Yeah, you're right. That's the better way of putting it. The easy money has been made. There could still be more to make. There still could be a little more juice to squeeze out of this one. But
Novo is now a $450 billion company, far larger than anything else in Europe. And 300 billion of that is because of this one drug. Is that really what you want to buy? Buy something with some upside. I don't know.
The other thing I'm thinking about is if the market is gonna rebound that we've been talking about, then typically a rising tide lifts all ships. So it would have that as well, helping with it. But to go from what $60 at this time last year, this was a $60 stock, and now it's it was 100. Now it's 96 this morning. So just a tremendous year. Hey, this is why I don't really invest in biotech or healthcare. But if I did, it would be in the big ones. It would not be in these tiny ones with like one, Hail Mary drug. It would be,
I don't hate that one bit. I don't have a rule like that, but I find myself less and less interested in having less and less exposure to pretty much all healthcare stocks over the years.
That's exactly right.
I don't want to be involved in.
Loving this comment from Rachel. Bitcoin or the blockchain does not fix this. Ozempic will fix this. Ozempic fixes everything apparently. So stay tuned for tomorrow when Ozempic cures another disease.
So I joked yesterday, and I wasn't really joking. How many times, what is the over under on how many companies that have nothing to do with Ozempic mention Ozempic on their earnings?
The over-under is not high because this is not a thing that
I won't name any names, but I'm watching a panel discussion on one of these aftermarket shows last night, and you know what they're debating? What are the trends for Ozempic? And he's like, look out for retailers. He's like, people are going to need to buy new pants. I'm like, holy shit. Come on.
That's a little bit too far for me. This is not the kind of thing that Disney's not going to drop a press release about how Ozempic is helping their business, right? This is not.
No, but American Eagle or somebody might be like, "Hey, people are skinnier, jean sales are up." Listen, you're going to hear about it from other companies. You already have. Walmart's doing it. If Walmart's doing it, they just opened up the door for all these retailers to start talking about it.
Maybe.
We'll
hey, speaking of retailers, this is a survey that came out that I want to talk about. It comes out every year, and I simultaneously love it and hate it at the same time. Okay, so this is a Piper Sandler survey. It's their annual teen survey. Okay, can I bring it up here? What's going on with my screen? I don't know why it's not. I got this nice, pretty graphic. Hold on, let me just refresh here. And they do this annual survey of around 9,000. Here we go. 9,000 teenagers, and they just ask them, about their consumption habits and things like that. So I hate this because it provides, in my opinion, very little real value, and there's no ideas to be had from this, I think. But I can't help but find it incredibly interesting. Okay, so
34% own an Apple Watch. Wow.
Yeah,
that's a high number.
So anyway, let's scroll down to this one. This is just a ranking of favorite brands and
Hold on, leave that up. That's good.
Okay. Yeah. So anyway, so the takeaway here, the takeaway from the top half of this page to me was like, holy Nike. I mean, Nike is far and away the most popular brand. I had no idea that their clothes were so popular, but they are apparently.
Yeah, man.
Yeah,
for sure. Yeah, the Nike logo is powerful.
Yeah,
that doesn't surprise me. See Nike.
And then this, I'm sorry, Adam Sandler as the number 2 most popular celebrity. What?
Hilarious.
Come on, Adam Sandler was the most popular celebrity yet, maybe in like 2001, but like now, what was his last good movie? Honestly. I watched his new one on Netflix, and it was dumb, but I liked it, but it was so stupid. It was a dumb movie. Okay,
Raising Cane's makes the list.
Yeah, that's a demographic. That's a geographic thing.
Alex Earl, shout out Miami. I just found out who this person is this weekend.
I don't know who that is.
Areas. Goldfish over chips. I don't know about that. I'm a Cheez-Its guy. I'm surprised to see Snapchat here more popular than Instagram. I wasn't aware of that.
Oh, and that's my other big takeaway. Is I'm surprised YouTube is not far and away above Netflix and all others here, because I think
I would love to see where that was just 5-10 years ago, but Netflix had a far bigger lead. YouTube,
oh yeah,
YouTube's going to narrow that gap and crush them in the future.
Yes,
YouTube TV.
Totally agree. Not even YouTube TV, just plain old regular YouTube. Like they have, in my, at least as it pertains to me, the best algorithm on social media. They always know what I want to watch. Always. I don't know how they do it. It's crazy. Anyway, this is the Piper Sandler annual team.
Yeah. No, leave it here.
Okay.
Give me this real quick. I just want to run through this.
So anyway, Shein. If you don't know what Shein is, my wife loves it. It's like this super cheap. It's like this incredibly cheap Chinese e-commerce site. You just get stuff on there for like $1 or $5, like a dress for $5. It's crazy.
I mean, Nike must love seeing their name here for DTC shopping. The top shopping websites,
perhaps. Yeah, I mean, that's true.
It's not nothing. What is this social causes? What is this about?
Social. Oh, I didn't even look at that. Again, I don't actually find it. I don't derive any value of this. I can't help but think.
And this is teenagers being polled, or
this is teenagers. This is 9,000 teens surveyed. Average age 15. How do they know what their average household income is? I did not know what my household income is as a teenager. Are you kidding me? I wasn't asking my parents how much they made. Unless that's part of the survey. I mean, it must be. But I don't know.
Crap.
Yeah. Anyway, I thought that was interesting. If you want to see the link, I'll drop it in the chat if you care about that. But they do this every year. What else? 70% of teens have used Spotify in the last 6 months. I think we probably could have assumed it was a number around there.
I would never give up Spotify. I would never give up YouTube TV. Never give up like HBO Max. Trying trying to think of subscriptions that
I've never even paid for
Adobe.
Spotify, so
you use Spotify.
I don't pay for.
Oh, that's
Spotify.
right. You pirate your music.
No, I don't pirate per se. So sometimes I do buy my music. Sometimes I'll download a song for real. I just like having ownership. So, yeah, Rachel, these are not the kids of finance professionals if the household income is 70 grand. So,
Who do you think you are, Taylor Swift? You want to own your own?
sometimes I like buying my own. Look, if there's an artist that I like, I'll support them. Anyway, I thought that was fun. What else did I have on my list here? So, Piper Sandler. We talked about Disney. Talked about.
You see the Bank of America downgrades?
No. Oh wait, they're coming in now.
Bad juju.
Whoa.
Bank of America. Bank of America's got earnings out here in a few days. They just lowered their price targets on like every regional bank that they cover.
Well, let me see. Wait,
straight up across the board: Regions Financial, Truist, USB, Ally, CFG.
Oh, you mean from Bank of America?
Yeah, Bank of America.
Oh, yeah. I saw this. I thought you meant like on the stock. Okay.
Lowering price targets on other banks.
Yeah,
going in the earnings.
Hey, speaking of earnings, you know,
hey, JC's trade is really working. The theoretical trade that he didn't put on in Bank of America, this thing is scooping and it is scoring.
Hey, can we talk utilities for a second, please? Before we bring Mary on, I almost forgot. I made it the thumbnail of the show and everything. I almost forgot to bring it up, but we've been ragging on them pretty hard. And yesterday, I almost went and bought Nextera because these things, you know, it's already kind of ripping a little bit. So, well, it's all $4, right? In companies. So, all right, rip is a strong word. Anyway, let's play devil's advocate for a second here.
Well, hold on. I've been very vocal about utilities, particularly telcos, which traditionally are treated as utilities up until recently. Very vocal about how I do not like these stocks. I think most investors don't need them. I think most people who are near my age group really don't need them, right? You want to be a little bit further out on the risk spectrum based on your age, right? All these things, right? So I almost never have kind words to say about utilities. Lately, with treasuries where they are, I guess we kind of raised the volume on our thoughts on utilities. I bothered some people. I really pissed some people off. At least one person. So my dad sends me a list, an extensive list, six reasons why an investor. Because I came on here and I said I don't see why any investor would own utilities when treasuries are, 5%. And he said, here are 6 reasons why I or any other investor should own utilities over treasuries. You want to hear them?
I'm ready.
Take it from the top. Number 1, interest rates may not always be this high. They were 0% for years. No guarantee on rates where dividend aristocrats have much better track record of sustained income. That's fair.
That's fair.
And there's a time and place for utilities, right? To that point. Remember ZIRP? 0 interest rates?
Yeah.
That's a good time to own utilities. And what happened was interest rates were so depressed for so long that people did that. They moved into these bond proxy groups and they bid up the value of these stocks, right? And now that rates are no longer that low, you're getting a significant repricing of these companies.
Yeah, that's fair.
Number 2, stock appreciation. Stocks have better chance to go up and appreciate faster. 100%, right? They also have a better chance to fall and depreciate faster.
Wait, are we comparing these to bonds? Yeah. Okay.
Yeah.
Okay.
So
Yes.
in most environments, sure, stocks are going to rise, while bonds maybe not. But in a bear market, when most stocks are falling and rates are being cut, bonds will be rising. So time and a place again, but good point. Dividends pay monthly. What he means is if you build a portfolio of dividend stocks, you're always getting paid. You'll get paid numerous times of the month if you have a basket of stocks. Money markets pay once a month and CDs even less frequent. This is the best one. Dividends are taxed lower than interest. Interest is ordinary income, the highest possible rates. A person receiving $41,000, single, or $83,000 married would pay 0 in income tax. Liquidity. Money market is liquid, but so is selling a stock. Almost as quick, but liquid, and CDs are not liquid at all unless you want a penalty.
Although sometimes the lack of liquidity is that's the advantage. But yes, okay.
Owning stocks is exciting. Much more exciting than watching a money market or CD each day. Mary talks about the yield on cost, which is, I guess, a good point. And he really likes Nextera.
Well, Nextera is the largest holding in XLU. So,
1 second, Spencer.
I don't know how exciting it is to watch utilities. I guess it is more exciting than watching bonds or watching your CD grow. But yes, I mean, some of those are very good reasons, honestly. Most of them are good reasons, right? The thing about taxes was nice. We didn't think about that. Liquidity, I don't know. It's a bit of a stretch, and sometimes you don't want liquidity, right? Yeah. If you're saving for a specific reason and you want the income for a house in 3 years, you don't need liquidity. But yeah, I mean, the
tax point is a really good one.
Taxes is probably the best point there.
That doesn't get mentioned as often as it should, because when you do compare the two, one of those income streams will be ordinary income, and the other, like my dad said, it could be as low as nothing in taxes, right? So that's going to make a material difference. Yeah.
And then the psychological aspect of getting paid more frequently. But yeah, and also rates. Yeah, no one knows the direction of rates. So yeah, that goes without saying.
Time and a place. I think there are better environments for these stocks. Sorry, Dad.
All right. Let's bring on Mary, and you wanted to save the meta conversation for her. So
we got charts. We got Mary charts.
All right. Mornings with Mary. Are we ready? I hope so. That was a little loud, man. What's up, Mary?
It's fine on my end. Hey, good morning. Okay.
So I did a thing. I went and bought some Meta yesterday. Did you do the same?
I actually bought Meta a few days ago, but yeah. Ooh. Yep. So I think Steve probably has the chart. I don't know where he went, but yeah. Well, I remember I heard you on Spaces yesterday saying that you're going to get into Meta, and I was applauding you because I know you're kind of tentative getting into the stocks.
I'm not. It's not that I'm tentative. It's that I like to. I like my ideas to marinate a little bit. You know what I mean? I'm not. Maybe I'm not the most spontaneous person in the world. When it comes to buying things, at least in my real account. In my like YOLO Weeble account, yeah, I'll go all out on the stupid thing. But with the real money, you gotta let it marinate.
That's fair.
Yeah.
Yeah. So I picked this up Friday. Actually, when we got the reversal in the market, and I mean that's what we were talking about last week.
Me too, Mary. How'd you play it? Common, yeah. So, it's been holding and respecting that 300 psych level. And I just thought, well, that's where I'm going to define my risk, and got in. And of course it's worked out well since. So my plan short term was just to take it up to the summer highs. Might probably take some of the position off there, and then I might let more of it go. No, let it go. So then
let it ride.
So then you would be taking profits right now.
I haven't looked to see where it's at this morning.
We're there.
Is it there? Oh, okay. Well, then I guess I'm going to let it go.
Not even overbought. This thing just looks so good. What is it?
It does.
Another 20%? What do we got here? Let's see. Yeah, I think
you're looking at just taking it all the way up to the 385 to the all-time highs.
That's right. So what would
go
that
big or
mean?
Go home? Why not?
That would mean 18%.
Yeah.
I think you listen, it was a nice trade. I'm not going to tell you not to feed the duck a little bit.
I might take a little bit off. It was a sizable trade.
I lost money, I guess, for a while, but then got it back. But in the Facebook IPO, which was more than 10 years ago now, and I told myself I'm never going to own this stock. I don't want anything to do with this.
Right? Yeah.
And I didn't trade this all last year. We talked about it. We wrote about it. We covered it. But I wasn't involved. Looking at this setup, I couldn't help myself on Friday. Couldn't help myself. The relative strength too. Last week. Google also. So,
Yeah.
What else is on your radar?
So I also have, last week we talked about SE, and I day traded that one a couple of times. And then again, on Friday we opened red and it came right down to that 41. And I thought, I think I'm going to just take a little nibble on this one again. And then it had a day yesterday. So, it's got that low volume pocket. Do you have the chart by chance?
I didn't give it. Give him a second.
That's okay. It's got that low volume pocket from 41 to, can't remember what our target is on that one.
55.
It's in the 50s. I know that
56, really?
maybe. Yeah. So letting that one play out a little bit longer because, like I said, last week I was just day trading it only because wasn't exactly sure where the markets were going to go. But now that we've had the turnaround and the follow through, feels okay to be holding things a little bit longer. So I started getting heavy in a lot of tech last Friday.
I really like this price action in SE specifically.
Yeah.
Because so we ran up here. This is an old chart. This started to go, right? This made a nice move and kind of peaked out in late September and started to fill this little pocket already. Then it pulled back. We were on here talking about it. I think it was the last time you were on. I was saying,
yeah, last week.
What?
It was last week, last Wednesday, where you were saying, I think it's rolling over. And I said, yeah. So
I said, I don't want to give this all the way back to the pivot lows. That's too much risk. It's really those pivot highs. It's like 40 and change. And it kept digging in and holding every day. It's long wicks. And now it's taken off of this level again. I think it's still actionable here. Just keep it a little bit tighter. But this one, what a nice setup. I like these little failed breakdown type patterns for quick tactical trades. I think there's a lot setting up in China. I know the name you're in China looks a little different than most, though. Want to go to Pinduoduo?
Yeah, sure.
Apparently, it's Pinduoduo.
Oh, really?
Someone finally corrected.
No, it's not. It's neither. I think it's PDD.
Well, they changed their name because nobody could freaking pronounce it.
Fair.
Great base, though. Apparently, there's like a regulatory overhang for this one where.
Oh, gee, you think?
No. Listen, I might explain this wrong. Thank God I have smart friends. They don't allow our tech companies to be accessed, right? Like our websites to be accessed in China. We, for the most part, try to do that back to them and don't allow Chinese websites to be accessed here. This one somehow slipped through the cracks. They have a successful online business, apparently, even in the U.S. So I don't know. That might not last forever,
the same way you feel about Facebook is how I feel about these. I can't do it.
Just because it's China? Oh, yeah. I used to have PSTD from Chinese stocks from.
KWeb, man, and KWeb.
Well, the relative strength on PDD versus KWeb is at all-time highs, is it not?
That's right.
Steve? Yeah.
Yes. This is the strongest Chinese stock. I was chirping in our chat Monday. I was saying, guys, China is set up for a face ripper. We were talking about it on the Flow Show with Sean. Sean was like, I don't like this chart. I'm like, you might like it in a few days. Got exactly the move we were looking for. This thing is totally scooping higher. What a beautiful bull hook. I'm talking about like MSCI China. If we have MCHI fonts, throw that up. MCHI. Listen, the squeeze is on. These stocks have been so beaten down. I was zooming way out on the biggest components in China yesterday. Tencent, Alibaba, not JD. That one looks a little bit different. But a lot of the big ones, they're just building out monster bases that need more time. But boy, oh boy, if they keep climbing up the right-hand side, eventually those bases complete. The reversal is on. I think there are some really nice tactical trades in these Chinese equities right now. And I think there's only going to be more opportunities in the future as those bases, continue to build. There it is.
Isn't TAL like the best Chinese stock right now? It's like a 9-bagger in the last year and a half.
Super long TAL. That's been a good one. I probably have to get out of that like today because time is moving against us here and we're very much in the money. So any big down move is going to hurt us at this point. We are in the 1027s, a lot of us. And I was holding out for $10 and we got it right here. So actually, as soon as we get off this call, I'll be out of my TAL options.
Riley mentioned Luckin Coffee. I cannot believe this stupid piece of crap.
Coffee.
Oh, they're real?
I've been to Luckin Coffee.
They exist?
Oh yeah.
What a stupid.
Singapore. Yeah.
What a dumb. The whole thing is just a dumb situation. No, I cannot believe the stock has gone from under $1 to $37 in 3 years.
Oh wow!
Oh my god!
Well, it kind of looks like Tao. It looks like some of these other Chinese names.
What a joke! This company went public, and then they're like, "Oh, by the way, like all of our sales aren't real," and
the stock plunges, gets moved to the pink sheets. From what I remember, this used to be LK, but they no longer met the filing requirements to be listed on a real exchange. So now they're on the pink sheets. And it says LKNCY, but it's the same chart that used to see where the hole got blown in it back in 2020.
Yeah,
that happened right around COVID. It was like as if the COVID wasn't bad enough for Chinese retailers. They also had like accounting fraud issues at the same time. Stock was down like 95% in a day, wasn't it?
One of the most, something like that. It was one of the most ridiculous things ever. Like literally, they came out and said our sales are not real.
Sales 75%. Yeah.
Just anyway.
Again, I think maybe there's something there. Just fire all the auditors. No more financial statements. We got price.
What a joke. Anyway, all right. Anything not China related, Mary?
Yeah, Mary, you brought two Asian names to us. Two Asian online retailers. Is this a theme for you?
No, it's I follow price honestly, and I follow the advice of my guys. At our company. So when you guys are talking stocks, I'm checking them out and then taking the trades based on what you're seeing. So
yeah, I got in the JD too, which is just really hooking higher here as well. But I'm out of that 3150, those pivot lows. These are really short term. Next week or the week later, after these kind of cool off, digest, the gains of the past few days, I'm still going to be looking for trade setups.
Yeah, for sure.
It goes with the whole beat up, dead cat bounce, counter trend, laggard trades, right? These are some of the worst stocks. They're so beat up. They're bouncing the hardest right now. And that is a trading strategy for moments like this when, it's a new leg higher. Okay, we want to play this new rally. What do we buy? Sometimes the answer is very counterintuitive. It's buy the worst ones.
Yeah, didn't I see some news out from China about injecting?
Oh God.
It was something economy infusing money, something. I thought I saw news on China this morning, but if you guys didn't, maybe
No, there's every day there's something else. Yesterday it was that their top commercial lender is like going bankrupt or something. So
okay,
yeah.
I thought there was something about them infusing the economy.
Stimulus.
Yeah, stimulus. Thank you.
All right, whatever.
They're bringing out the bazookas again.
Yeah. The money gun. Okay, 954 here. Market's looking pretty good today. Got some red.
Great. The market looks great. Not pretty good.
Yeah.
You
got some red. Oil, Bitcoin, Apple.
If I could use the words of Brian Lund, I think he called it perfect. The price action has been perfect since last week.
Staples lagging, healthcare lagging, but everything else is looking up. Yeah. Energy obviously is down with oil, but yeah, I mean, hey, my screen's like 85% green, so yeah, I mean, it's definitely a good day. Weird that Bitcoin is down. I'm looking at just the futures here.
Care.
Bitcoin down 1%, but ETH is up 0.5%. It's weird. Don't see that every day.
That's something you haven't really talked about much lately, is the correlation of Bitcoin with the tech stocks and how that used to be very. What's that?
Well, we know they're correlated.
Well, but it's been much tighter in recent or in previous years, and now you see tech moving again and Bitcoin not, and we've seen that here the last several months. Something for Crypto Friday to maybe go back and talk about.
If it's not going to rally during a tech rally, then what even is the point?
Well, that's my point. That it used to move with the tech stocks much more closely, and now it's just. On the plus side, it also has been pretty stable too. It hasn't been having huge spikes, but
so just look like ultra short term, right? You would think, talking about these big moves from the stock market that started last Friday with these engulfings. Look at the last 3 candles, Nasdaq, tech. Look at the last 3 candles in ARK, and look at the last 3 candles in Bitcoin. So that's definitely coming undone a little bit, that relationship, right? This was a big turn for stocks, a big move, and Bitcoin just sat the whole thing out.
And it's not participating. Yeah, I find that interesting.
It stands out.
Yep.
We'll continue to monitor it. I mean, for investors looking for risk-on vehicles, Bitcoin continues to become a worse and worse option.
And that's always been, for me, my biggest beta play is...
That's what you want to hear.
Yeah.
Listen, for beta right now, for juice, we got the Chinese equities, you got the ARK stocks, right? Go to the speculative
cyber.
Like, go to the really growthy names. You know, Mary mentioned some of them. The DraftKings, SC will get you done. That's speculative name. There's a lot of them out there, and they're all bouncing. They all look good.
Are you saying Bitcoin's becoming a flight to safety before our very eyes?
Mary, when did you get into Palantir here? We have the Palantir chart. You want to talk about that?
I think that was a Friday one too. I got into a lot on Friday, just when we made that reversal.
Oh, then you already got a nice move here on Monday.
Yeah.
6%.
Then I watch it on the 5-minute time frame, and I put some VWAPs in there, and just watch to see when they hold or when they break down or break above, and put on more of a trade or take off some of the trades. So
can you roll up the chart with the VWAP from all-time highs, Alfonso? Might be in JC's deck.
Oh, speaking of that, you're going to JC's thing today, right?
Yeah. So, probably not right after, but it's about a 2.5-hour drive for me. So yeah, I'm going to go meet up with JC at the Chicago Board of Trade and check out his presentation, which probably have heard a few times, but looking forward to meeting up with the CMT Association, and then also hanging out for drinks after. So if you're in the Chicago area or around, drop by.
Always nice to meet up in person with people. We're going to be doing a few in-person events next year. Stay tuned for more about that, because we're going to be getting together next year. Some in-person events, maybe in New York, maybe in Napa. I don't know.
Very exciting stuff coming.
We'll find out. Stay tuned. Stay tuned for that.
I'm going to be in Pennsylvania with him in 2 weeks, I think.
That's true. Palantir, we have that chart.
So do this, right? These speculative growth stocks that were absolutely slaughtered, 2022, drop those VWAPs from the all-time highs. Here we have a VWAP anchored from the all-time highs and also the IPO day price. We're right there, right? So the average buyer since the highs and since forever is now just about back in the green.
Wow.
Logically, that means a lot, right? So Palantir, I think, longer term, this thing takes out those old all-time highs and keeps rocking. I think this is a great company. The reversal is on. The trend is now higher. I think there will be plenty of opportunities to trade this thing over the coming quarters and years.
Wow.
Nice reversal.
Yeah, absolutely.
Very nice. All right, real quick, let's do some recess and then we'll hop. All right, recess for me is hockey's back, everyone. Started the hockey season last night. NHL's here. I'm excited. My team, the Devils, are actually good again after a long decade of shittiness. So we're back. Hockey is back, and I'm excited. That's what I got.
Not a Rangers fan?
Nope. Grew up in New Jersey. Go Devils. Mary lives near to Hockey Town.
Yeah, Red Wings. I mean, they used to be a pretty big deal. I don't know. I don't follow hockey, so I'm not entirely sure where they're. Okay, well, that's too bad. They used to be a really big deal, and they were a lot of fun to watch.
Yeah. Anyway, I'm excited because the rest of my teams all suck, but the Devils are good. So
you used to go to games at the one Continental Airlines Arena growing up?
Continental Airlines Arena, which was a dump, but it was our dump.
Yeah, I love
what that. What I wouldn't give to go back there just for an hour, just to relive. I went to I have some very fond memories in that arena.
JC talks about tailgating on here the other day. Hey, they tailgate out there outside of the Continental Airlines Arena. That's the overflow too for Giant Stadium. So
Continental Airlines, and then it became the Izod Center.
Yep.
Just thinking back to brands of yesteryear. So anyway, that's what I got. You guys got anything?
I'm happy for hockey season 2. I got no recess today.
Cool. Mary?
Mine was just going to be the meetup in Chicago, but you beat me to it. So if you're in Chicago.
Are you guys going to eat sushi?
I pinged JC yesterday about what his plans were in Chicago. He's getting together with someone that kind of helped get him started in the financial publishing. He's doing lunch with, I can't remember who the name was, but, and then I'm just planning on meeting him at the Board of Trade and I believe drinks after. I'm not aware of sushi, but
well, I hope.
I guess anything could be on the calendar, knowing JC.
I wouldn't be surprised if you end up falling into a sushi restaurant at some point with JC today.
And I mean, I keep trying to, egg him on to go for Chicago deep dish, but he just is not for it.
No, don't push too hard. You're not going to win that argument.
I know. It's just more funny than anything else now.
That's our show today. If we can bring up the calendar, I do have a couple announcements about that real quick. There is going to be no...
This is my favorite part of the show.
Okay. Well, where's my calendar? Hello? Calendar? Oh my God. Okay. Fine. Thank you. Dear Lordy. Okay. So today's Wednesday. Obviously, no part of the price action today. We did not get the chance to record yesterday before JC left. Also, what the fick? Unfortunately, canceled. Ian Cully is under the weather. That's it. When you have two young kids, you're like always sick, right?
So true.
Right.
Yep.
So his kids have gotten him sick yet again. So Ian Cully is needs to sleep. So not doing What the Fick today. As a reminder, though, What the Fick on Friday is going to be a mailbag episode. If you have any questions for Ian about bonds, commodities, currencies, anything, email us questions at stockmarketmedia.com. I'm keeping a list as we speak, and we'll address all those questions on Friday's show. We are doing Hot Corner at 1. We are doing, we're not doing Options Trend of the Week because Jason's not even here. So, all right, a bit of abbreviated day for us here on the channel. Hot Corner at 1, and then that'll be it. So that's what I got, everyone. Thanks to our guest, Brian Lund. Thanks to Mary. Thanks to Kimmy. Thanks to all of you in the chat. We'll see you guys tomorrow morning. Go make some money.
Bye, everyone.
Bye.
I can't take no